10 years of crypto advice in 20 minutes. My name's Ronald Bell. If you don't know who I am, I've made over $10 million passively investing into crypto. And I help other business owners multiply their capital that they're left with at the end of the month through crypto. So I've been in crypto since 2015. I've gone from having a $10,000, $20,000 portfolio to now having over a $10 million portfolio. All of the swings, all of the highs, all of the lows along the way. I've ridden that, so now I can teach you guys. Let's get into it. Crypto and then AI are going to be the last wealth creation opportunities. To me, crypto is still the best opportunity for people who are more on the normal side. You know, you don't have the access to the big deals for this AI. You know, you can't invest in open AI at a low valuation. You can't invest in AI, really the whole sector, until the valuation's already massive. You don't know enough people in that sort of a field to get access to the deals, to invest in the infrastructure, to actually profit from that. So I believe that via crypto is still how most normal people, me included, even institutional investors to it on the lower end, will be actually able to access the crypto space. I think that will happen via the tokens on crypto. You know, some of the AI plays that I talk about in SRB crypto, I believe that they'll do very well. But crypto itself is still a sector where there's still a lot of money to make for them, because we're noticing a new financial service is coming out. See, it's the Fed talks is becoming a real thing. You know, we're going to see eventually a merging of the Fed and the banks together. CBDCs are coming ultimately, and you're going to have a wallet that can manage CBDCs and crypto. You know, can manage CBDCs and Bitcoin, and Bitcoin's going to be the inflation hedge. I believe more people will want to hold Bitcoin than will actually want to hold their cash, because that's an easier story to tell. Then people's trust in fiat is crashing. You know, it's quite low. We have all of the stuff happening with Fort Knox. You know, people wondering if they even have the gold that they have. That's starting to catch steam. And don't you see the very narrative that's being painted for Bitcoin? Because they'll say if that was all transparent and it was on the Bitcoin chain and it was all on the blockchain, none of this would happen. So, you know, we're going to have tokenization of real world assets. It's going to be transparent. It's going to be harder to deduct for taxes. It's going to be more compliance based. I believe that will happen on Ethereum. So I don't know why you're not in this sector. And if you're not, you're going to miss the opportunities that are there. Understanding market psychology, and where I believe that we are still in disbelief stage. How market cycles trend to work, you know, bull markets climb a wall of worry historically. You know, that's always what happens. The bull market climbs regardless of the news. You know, the news can come out that's good or bad. It didn't really change its trajectory. In my view, Bitcoin works via a 4-year cycle based around the halving. You know, and that's something that's been cemented in. You know, it's been proven since 2015, which is when I entered the crypto market. It's always played out the same. I think the mold may break, you know, under this cycle. There's a chance of that, which is why I'm very active in the market. You know, I'm very much studying not only just sentiment, the chart, but also based on my 10 years of experience, my intuition in the market. You know, that's why I can generally, in my view, pick the macro moves better than anyone. You know, I was saying to buy the Bitcoin, I believe that bottom at 15K. When it was 20, I believe that we're going to 6 figures. You know, we hit 110K or 108K. And then ultimately now we're 85K. We're holding on to 80K support, which in my view needs to hold. But if it doesn't, then it doesn't. You know, it doesn't mean that we're in a bear market like everyone says. We're just in a mid-cycle slowdown currently. Like that's where we're at. We're in essentially, in my view, that can become the first sell-off phase before immediate attention phase. That's what's coming in my view, because they're setting all of the infrastructure pieces in via legislation. They cleared a bunch of companies. They've cleared enforcement action against many projects and many exchanges. They've cleared all of that stuff off the plate. So into the future, there's going to be much more promotion of crypto. You know, a lot of the big players are structured in now. They can make money via fees. So I believe that the mass promotion phase is yet to come, media awareness phase. I think end of year to the year after, crypto is going to be very hot. I believe next year it'll be extremely hot, but it is what it is. You just got to wait it out. Like with investing, the money's made in the waiting. Money isn't made on the pump fund, sitting there and fucking trying to get in the next token. Predominantly anything that excites you is how you lose money. Casino is very exciting, but how often do you leave the casino as a lead making $1 million? Not very often. Versus how often do you actually make on a long-term hold, invest in something for 1 or 2 years, have a thesis, and then you make your big return. That's it. Money's made in the waiting. Don't invest in what you don't understand. See, the risk of chasing trending coins, you know, chasing things on pump fund, you're chasing the latest celebrity token, this, and this. You're not really learning anything. So you don't learn a strategy. You don't learn how to diversify. You don't learn how to structure a portfolio. You don't know about allocation. You know about risk management, mitigation in a very risky space. Yours is just, this person put a rug pull out and I'm going to invest in it and sell it to an idiot. And then maybe I'll write another one. Even if you succeed a few times, eventually you're going to go broke because you don't have a risk. Your risk is not mitigated. You don't have a portfolio. It's not allocated correctly. You're too risk in Like you're going to get fucked eventually. Like that's inevitable for you. Yeah, that's why you need me for such a strategy. You know, I'm the one that allocates portfolio correctly so that over the year's cycle, your long-term holds will bail you out. Even if you invest in a few coins that turned out to be rug pulls, your actual structure will bail you out. Like time bails you out with tech. That's it. If you're younger, understand that time bails you out. You can take much more risk versus someone who needs to take retirement in a few years. They have to take less risk. And that's the thing with crypto. Like the cost of trying to be in so many coins or so many projects or so many pumps at once, right? You're trying to get into something that's already rising. Well, now there's a higher risk. Like, you know, you're in a riskier position because you're buying in speculation. See, the speculation is the froth on the top. The froth on the top can come off at any time. Like you're FOMOing in it. That's a mistake. Versus having a thesis or an agenda. Maybe your concept is I buy Ethereum at 2K and I'm not going to sell till 6K. And you just sit there and say, if it takes 2 years, so be it. If it takes 10 years, so be it. If it takes 20 years, so be it. You have at least have a plan. Like you don't have to sell. You're not going to panic. You've actually done something that's going to work for the long term in your view. You think that there's going to be more users on it, or you see that they're going to upgrade the tech. You see the ETFs going to allow staking. See, now you're talking to me and you say that you have a thesis and I can get behind it and be like, all right, you have an idea. Versus, oh, Kanye might tweet the new coin and this and that might happen and all these things. That's all crap. Like that. Everyone thinks like that. It's like the saying that Buzz Lightyear meme where there's like 10,000 of them on the wall and you just say, oh, I'm going to sell it at a 10x. Like everyone's trying to do the same thing. And as such, a lot will just be happy with a 2x and then dump on you, or a 10% gain and dump on you. That's how the markets work. You can't really get like concept of taking $1,000 and getting rich at the casino. May as well just throw it all on a number. Like it's a similar, very similar concept. That's this gambling. Gambling and investing are very different. Like gambling is just like taking a massive chance and guessing. Investing is having a thesis, a strategy. You know, you're playing it out. You have your portfolio weighted in a way that time's likely going to bail you out unless crypto itself failed. But then also you can structure portfolios around your crypto portfolio to mitigate that sort of a risk versus balls to the wall casino. Even if you have a strategy, you're playing blackjack, most people are going to lose. And that's how it is. And trading is a very similar thing too. Most traders actually don't outperform the dollar cost average guy. Like that's been very well studied. Dollar cost average is less sexy and it's less fun and it's less this and that versus just say, oh, I just want to go all in on this coin and I'm not going to sell till it's 1,000x and then you lose everything. That's the dollar cost average guy generally outperforms. That's how it is. The 4-year cycle theory, what is it? So in my view, Bitcoin, or at least it has historically operated in 4-year cycles around the halving. And that's based around mining rewards. They get halved every 4 years. So theoretically, price continues to increase, then the half as many coins are being pushed into the market. Even if price stayed the same and buyers' interest stayed the same, that should push the price up because now there's artificial scarcity. You know, it's like the cookies, and there's one cookie here and you continually cut the cookie in half and half and half and half and half again. That's kind of it. But you're still distributing it to the same people. Like eventually people are going to start having to pay more for it because it's going to get very small, you know, and then they're going to have to pay more for it. I don't know, people say with Bitcoin now, they could say it's not needed, or, you know, it might fall off. It's a collectible, all of this stuff. And all of that stuff is possible. You know, all that stuff is possible. Anything is possible in theory. You know, anything's possible that there could be an asteroid hit the earth that's made out of gold and then everyone's going to be like, oh, it's unlimited gold here now. Like anything is possible, but is it probable? Very likely not. There are all of these companies and all of these businesses and, you know, funds like BlackRock and all of these governments getting behind Bitcoin because it's going to fall apart. Like it takes a lot of work to do that. There's a lot of fees. You know, it's a multi-trillion-dollar market. Like in fees in the next 10 years, BlackRock can make $1 trillion. You know, that's a trillion. Like that's not small money, because I'm sure that they bought accumulated very low as well in the lows. But that's how it works. You know, there's a lot of infrastructure behind it and a lot of people and a lot of the best minds in tech. So if you want to bet against them, it doesn't really make sense because we're moving into a tech future. Bitcoin can be a lot of things. It's still new. It can be a lot of things into the future. You have to think eventually AI is going to become out, like singularity is going to happen. Do you think such an AI machine or tech is going to use fiat? Or is it going to use Bitcoin? Because all it understands is Bitcoin. It's going to say that that's a superior form of payment for the machine that it is. And that's, I think, is going to also push the masses towards it more. Take advice from more experienced people. When I was younger, I wish that I had someone that I could look to who'd lived life, who'd already experienced things, who was already a multimillionaire, who could teach me many things. You know, someone who's done a lot, could teach me things. And now I am actually that teacher. See, some parts of life, you actually become the person that you needed. Like that's the ultimate closing of a karmic cycle or a loop. You go from the person who needed that sort of advice to the one who actually figured it out and now provides it to others. See, that's a cycle has closed. And that's the concept. And that's why I have my Telegram for free that I keep on Stephen Ronald Bell. It's the Telegram channel. I think it's just simply the greatest channel that's ever existed. Like the amount of value I give away in voice notes and extreme concepts. Concepts are based around everything. So everything compared to karma all the way to crypto. I cover everything. Spirituality, I think that I cover pretty much everything, and I cover it for free. And then I also have my channel SRB Crypto, which is my crypto group. It's a paid group. And a lot of the members are happy there. One of the members telling me recently went from 100K to 500K since he's been in there. So that's serious gains, but it's also done in a way that's managed his risk. Despite crypto selling off to a lot, his crypto has sold off. He hasn't been demolished. He's still done quite well. That's the benefit of risk mitigation versus the guy who could have just bought a pump and dump. Maybe he made 100K, he didn't cash out, and then he rode all the way back to zero. So that's what's the different maker is. I've been in crypto 2015, so you can ride off the back of my knowledge. And if you want to join the free Telegram and see what I'm talking about, there's a link in the description. Balancing your portfolio between stability and growth. So the concept of managing risk, right? You're managing risk in a risky sector. Like crypto itself is already risky. If you're diversified into tech, if you're diversified into, that's risky again. Crypto itself is like a higher beta play of tech. It's similar to the gold silver theory. If gold drops 2%, silver can drop 5%. If gold goes up 2%, silver can go up 5%. That sort of a thing. It's like treble down. It's more an explosion the way down, higher beta. But yeah, how you can mitigate risk is you can be in the majors as well. So similar to how I do it is maybe I have a set Bitcoin allocation, Ethereum allocation of coins that I know, in my view, are not going to disappear. Like they're going to stick around. So time will bail you out on the other decisions that you make, which are more speculative the way down. But then the time on the big caps will keep you in. And then you have your speculative plays down below. So if one or two of them ended up being a fizzer or a dud, you would actually still be bailed out over time by your majors. So it's similar to that, right? It's like having an umbrella theory. If there's a storm or a rain or a massive thunderstorm or something like that, you would at least have coverage, right? Because if there's a market crash or the market goes down, they go down less. Yes, they go up less, but they're trending up a lot higher over the long term, in my view, because it's an offset to the fiat printing, and the fiat printing must continue. Pay attention to institutional adoption. How ETFs generally going to change the game is they look at crypto and Bitcoin itself over a long term, like a lifetime. Eventually, I'm still not saying pension funds that you're really here yet, banks are really custodying it yet. That's only still in the inception stage. But via ETFs and ETF products is you get a lot of people who are investing forever. They're investing for a life cycle. Like they're invested in by ETFs for the long term. They're not really as incentivized to be selling. They're going to know a lot less about crypto, yes, but it's going to be just an allocation to them. See, for many of us, crypto is like, I'm 50% of my net worth is in crypto now. So for me, those sort of fluctuations, for me, I'm fine. But for others, it can be hard on them, but others who enter via ETFs, they might only be in a few percent into Bitcoin or a few percent into a crypto ETF of like big caps. They're not feeling it as much because again, the risk mitigation is there. I'm more invested in it because I'm there with you. I'm still in the trenches. I'm still a long-term believer that I believe the same theory that Warren Buffett says, where I don't believe everything that he says, but he says invest many eggs into a basket that you're best at and watch the basket. I think that's a very good concept. Timing your exit and entry points wisely. Yeah, how to get in and out of the market at a good point. I cover that a lot in my group, SRB Crypto, but you can use my knowledge and my know-how for when I'm exiting. But this is a very similar theory for how we sold the top of a big part of our portion for Toshi at the top of I think the actual exact top of the market when it listed on Coinbase, but then it went parabolic. But it's knowing market psychology. The best buying for crypto hurts, like anything. The best time to buy assets that you think are going to go up is when it hurts to buy it, because you think, oh, I've certainly lost my money, because that's now the point of maximum financial risk. Because how you feel, everyone feels. See, people forget that. Like humans, the psychology is the same. That's why markets boom and bust, because market cycles are just an expression of people's fear and FOMO. FOMO is one that I need to make money, like human greed is one that pushes the market into obviously a massive bubble. And then the fear, I don't want to lose money, because obviously the people buy at the top, they're fearful, and then they start to dump and there's a massive crash. Institutions, obviously, in my view, many get out at the top and then start to short, but it's that sort of market psychology is based on human psychology. Like it's always apparent in there. So you have to know when to buy and sell, right? And that's what I'm for. Focus on US-based projects in the current political climate. Why I think currently US projects are stronger, and I think that thesis will probably play out into the cycle, is because Trump's America first, right? And the American ETF products or institutions, I think that they're going to have like America first concept for their companies. So then you've got like the Ripple, I think Chainlink, which other ones, ADA. I think they were in talk of ADA. I'm not a big ADA fan, but it is what it is. It doesn't really matter to me. I think Ethereum will have its spot there, despite not being a US project. I think that it's going to have tokenization of real world assets on there. I still think it's the most decentralized of the smart contract platforms that we have, which is important for real world assets, because if it's going to get global adoption, it can't be censored by one government. If all assets are on the chain eventually, and I believe that they will be, but then US can just censor them or just like delete things or do things or all of this stuff, that'll be a big problem for adoption globally. Like a lot of countries won't adopt such a system. I think that's the concept of Ethereum into the future, and via staking rewards, I think that it'll do well as well. But yeah, it's an interesting time for crypto, and I think that it's time now to start paying attention. Don't overanalyze Bitcoin's role as a payment method. Why Bitcoin, in my view, I've covered this once before, isn't it primarily a payment source? See, the concept of paying in Bitcoin, if you can store Bitcoin, if you can custody Bitcoin via a banking product, so if your app on your phone has a Bitcoin wallet, that's one thing, because I can pay you in Bitcoin, you can store Bitcoin, and then maybe that's what you want. Hyper Bitcoinization is possible under such a scheme, although it would be slow and clunky and slower. I think that they could definitely speed it up with a Lightning Network concept. But currently, if you're taking Bitcoin from me and then you're selling Bitcoin, for fiat, because a company, maybe you go into a store, maybe you go into Louis Vuitton or something and buy anything you want, buy a shirt, and then you pay in Bitcoin and they get the Bitcoin and immediately sell it for cash. You become a net seller. So you've taken your Bitcoin that you've held and given it to a company that's now sold it on market. So it's a net sell. Like it's not something it's taking away from a holder and cashing it into fiat. So I think such a concept over the long term doesn't make sense. Like, why not just pay fiat? Why would you fuck around with Bitcoin and have all these middlemen and all of this stuff, which Bitcoin is not intended for? So under such a scheme currently, I don't really believe in it. But of course, when banks, I think custody of Bitcoin is becoming more of a concept, more of a talked about thing. And I believe that laws were just passed that banks have to accept Bitcoin now. So they have to accept that it's released in the States. The comptrollers has changed that so that you can now buy Bitcoin or crypto without getting censored by the bank. Because that's happened to me many times in Australia, where I've cashed out money from an exchange and the bank's closed my account for terms and services breach. That's only done it because they were a competing platform. But I believe now the banks and the Fed are going to become a hybrid. See, they're going to merge together like a hydra. So people think that they've killed the banks in the concept into the future, but actually they're just merging, and they'll merge via CBDCs. Like the Fed will merge with the banks. It's the only way that I believe both can survive under such a scheme, because I believe neither are really needed into the future. Like a lot of that, and you can see with the Doge concept under Musk, a lot of that's very much in the crosshairs. Keep security on the top of your mind. I think that in crypto, I believe if you have, let's say, over $1,000 or even earlier, you should have a hardware wallet. You have to physically lose the wallet, or it has to be physically taken. You have to lose the seed code. Many more things have to fail versus keeping it an extension, keeping it on a MetaMask with just a password, keeping it on you keep the information on like Evernote, as some other crypto influencer did before he got hacked. All of these things that you can do, you keep it in your email, all of that stuff, you keep it on exchange. It's not in your custody. Like it's always at risk. You can keep it on some of the big exchanges, but phishing and scams are a real thing. They're much, much easier to happen. So you have to be just so much more careful now than you used to be. Except that you'll miss some opportunities. You can't catch every winner in crypto. The concept of, again, similar to the fear and FOMO. When you're investing in FOMO, you see a token going up. Every day it's higher and higher. Your point of maximum financial risk is increasing. It's a lot of people bought you earlier. They're waiting to sell. They're painting the chart so that it seems very exciting and you just jump in. Often you jump in at the worst time because of human greed. Like you wait a couple of days and then you think, fuck it, I have to get in. It's gone to the moon. And then you invest heavily. And that's when you're more likely to get fucked. You just have a thesis and it plays out. Similar to Toshi we had. And then we were holding for a very long time. We were holding that sort of a token for a year in an accumulation range. And for some, it's like 20 or 30% loss. And then in the case of like 6 weeks, it went 10x. Like and then you sell. That's the concept. Instead of just, you don't have a thesis, you don't have a plan, and you're just investing based on what you've heard. Oh, my friend said this token's going to go up, and I just saw this celebrity mention it, or this influencer's doing this. That's all paid. Like that. No one's talking about a crypto token that hasn't been paid. So that's what you have to be very careful of, specifically the low caps. If they're majors, it's one thing. Like Ethereum are not paying me to talk about it. I can't move the price of Ethereum. It's hundreds of $1 billion market cap. I can't move the price of Bitcoin. It's over $1 trillion market cap. I can't move that sort of a concept. But with the low caps and things like that, there's a lot of scams. You have to be very careful. And if you want to not get blindsided by the market, you don't want to miss any opportunities, join my free Telegram at the bottom of this video. So you'll take away from this, the key takeaway in my view is having a strategic approach to crypto. That's what I'm here for. You have a long-term plan. It's not a casino. I mean, for some it is, but for the smart ones, it's very different. And that's how we make generational wealth. That's it from me today. Join my free Telegram below, and I'll see you guys inside.